long-term depreciation of the currency and the risks that come with this kind of strategy. That's when investments like gold, Bitcoin, and energy producers can really help your portfolio. Analysts are warning that Bitcoin may go down for a short time as the cryptocurrency market waits for the Federal Reserve to possibly lower interest rates. This goes against the common belief that when rates go down, riskier assets go up. A Bitfinex report from September 2nd shows that the rise in Bitcoin prices since their August 5th lows is due to the fact that there is a lot of interest in BTC stablecoin continuous pairings around the world. But the rate of growth has slowed down. The price of Bitcoin has gone up by almost 30%. It is now worth $54,900, which is about 177% more than its previous low. With the help of Kitco News, she thought that Bitcoin would hit $100,000 in 18 to 24 months because it was becoming more liquid and could be used as a store of value. She also said that central banks were to blame for causing economic cycles by changing interest rates when economies are strong or weak. This causes asset prices to go up and down. Alden is optimistic about gold and Bitcoin, but he's not sure what to think about stocks. She said that Bitcoin's limited quantity and global liquidity will be very important to its price over the next 12 to 18 months. Watch the interview parts to get a better sense of what Lyn Alden was saying. If you want to see more, please follow and turn on post alerts. That's pretty much it. We don't have the long-term track record of those other decades like we do with gold or energy, but it serves the same purpose, which is that it's money that can only be used so many times. Because it doesn't have as much history as gold, it has some drawbacks. It's not the same as gold, but it has some benefits like being able to be used anywhere in the world much more easily than gold. It doesn't lose value as quickly as gold does. I think it's still below its total market that can change. The very small number of people still hold it in any real way. So I think Bitcoin is now one of those things that you probably don't want to hold if you expect the value of your currency to keep going down. If you think that real interest rates will stay high for a while and that stocks will continue to grow, then you should probably buy stocks and other similar investments. But if you do, you should expect the currency to lose value over time and the risks that come with all of this strategy to materialize. That's when assets like gold, Bitcoin, and energy providers can really help a portfolio. So in general, I think it will do well in the next 12 to 18 months. In general, I found that world liquidity has the strongest link to Bitcoin price. Global liquidity can be measured in a number of different ways. For me, the one I use most often is the world broad money supply in dollars. This measurement of liquidity has both a credit generation component and a dollar index component. This is important because most of the world's debt is in dollars. There's a good chance that Bitcoin will do well over the next 6 months if that market does well over that time, and or a year, and you know that when that's not doing well, Bitcoin's not doing well either. That can tell you a lot about what will happen in a week or even a quarter, but if you're very sure about the direction of global liquidity over the next 12 months, Bitcoin is a good way to show that, especially if you look at other Bitcoin specific indicators. In this case, the market value of Bitcoin compared to the on-chain cost basis of Bitcoin is what you should look at. That is, each coin was given a price in dollars the last time it moved on the chain. When there is a really big bull market peak, which usually follows by a 3-year correction, you can look at the multiple between the market cap and the cost base. There is often a big difference between the market cap and the actual cap. We haven't really reached any of those peaks yet in this cycle. Also, when the market is really going up, long-term buyers usually start selling. If someone bought Bitcoin 5 years ago, they might be worth 5 times as much now. They might want to buy a house and start a family, or they might just want to spread their money around a bit. They might want to cut back on Bitcoin because it's now about 90% of their net worth. You start to see selling pressure from people who have held on for a longer time and whose prices are going up a lot. So far in this cycle, that kind of uses up some of the new demand that comes in, which is part of the reason why the bull market is ending along with liquidity rolling over. Long-term selling has been pretty light, so I don't think this cycle has reached any of the peaks of previous cycles. This, along with being pretty positive on liquidity, makes me think that this cycle is over. Lyn Alden says that this is because of positive trends in funding in the next 2 years, Bitcoin will be worth $100,000. It will still do well, she thinks, even if it doesn't reach this goal. She does, however, worry that a major geopolitical event, such as a war or a sharp rise in the dollar index, could impact worldwide liquidity and cause Bitcoin's price to fall. She no longer sees Bitcoin as a safe haven asset, but she does agree that the fact that it can be moved around and stored privately could make it useful as a way to save money. A strong dollar hurts Bitcoin and other volatile investments by making it harder for people to buy and sell them. Lyn Alden says that the price of Bitcoin is affected by changes in liquidity. This means that Bitcoin is a liquidity indicator. Let's listen to the talk again and watch other clips to find out more from Lyn Alden. Let's say the next 18 months, I don't see too many bubbles in the Bitcoin space right now, so my base case is that Bitcoin will go up over the next 18 months. How optimistic? I mean, it would surprise me. It would surprise me if we didn't reach six figures this time. Maybe give yourself a little extra time and say 24 months instead of 18. I'd be surprised if you don't make six figures. We could go a long way north of that. We could, I wouldn't rule out going well over six figures, but I try to be conservative with my predictions. If we're still talking about this 2 years from now, and we still haven't seen $100,000, even though the cash cycle is positive, I wouldn't be surprised if something happened to mess up the cycle. When a fight breaks out, the dollar index goes through the roof, reaching 110. Or if you have an event like that. Like how COVID caught everyone by surprise in 2019, no one could have predicted what would happen. It wouldn't surprise me if Bitcoin had a hard time if something like that happened and stopped world liquidity from going up like I think it will. If prices keep going up for another 18 months, I would be shocked if Bitcoin didn't go much higher after this. Well, because so much debt is in dollars, a strong dollar is pretty much always a bad sign for cash. So that basically means that the unit of account for liabilities is going up rapidly, right? That's pretty much a negative liquidity event, especially when I use my own definition, which is the world broad money supply in dollars. No matter how you look at it or what you use to measure it, a very sharp and strong rise in the dollar is usually bad for liquidity. That's not what you would normally expect. In that case, even gold might not do very well, but gold would definitely do better than Bitcoin. When the dollar goes up that much, Bitcoin and most other investments that aren't very stable would probably lose value. That could have something to do with war or a big credit event in some place that no one is looking at right now. These things usually happen when people aren't focused on something else. That's kind of what I'd do if I thought I was wrong. Like if I thought, what if I'm wrong? Bitcoin will hit 100,000 if I think, okay, what happened if I'm wrong actually? One reason is that we didn't get that cash as planned. Either the dollar went up a lot or there was some kind of geopolitical event that had to do with oil war or something else, or some other big attack on Bitcoin. Such things could be the reason Bitcoin doesn't reach $100,000. Basically, my base case is wrong in the end. It's not really a safe haven asset though, since most people don't know how it works. A lot of people don't know what the halving is. Most people don't know how the 21 million number is used.